Hi, good morning. My name is Howard Baxter, and I look after KYC Managed Services at ComplyPort. Thank you for joining today. And really, what we wanted to do today is take you through what we see as sort of the future of KYC AML within the managed services space. And naturally, as we talk through this, it will be very focused on what we see in terms of the automation space. And I think it's important also to differentiate between sort of the large scale managed services where you've got a team of 20, 50, 100, maybe even larger teams doing work for clients. And also when you see smaller clients, we actually see a lot of clients who outsource KYC managed services to ourselves, and they're actually not even using a full person. They're using just a couple of hours a week or a month where they onboard, 5 or 10 clients. And for them, it makes a lot of sense for numerous reasons, be that technology or staff costs, etc. So I will try and talk to both of those elements during this presentation, because naturally it does differ from a very large scale to that smaller sort of asset manager or crypto firm who's only onboarding 5 or 10 clients a month. So moving through what we will talk to today, really four main topics. So the first one is around the increase in automation and artificial intelligence that we see in this space. The next is data centralization and enhanced data sharing that we do see. The focus on customer service naturally is really important in this space and probably touches on those first two elements. And then how we see managed services as potentially a strategic partner in this space. And again, as mentioned, I'll try and differentiate between larger firms and smaller firms because there is quite a large dividing line often. So the first topic is around increased automation and artificial intelligence. And really, one of the big pieces we see here is that automated identity verification and document gathering. And I think if you go back a couple of years, it's not long ago, maybe 5, 10 years ago, that you're still being asked to go into a branch to deliver documents, validate documents, etc. And you can see the massive shift. And I think, our children and their children, the concept of going into a branch to deliver a document is just a very foreign concept for them, and probably rightly so. So what you have seen is a lot of those really advanced document intelligence platforms. They're very uh, they're able to very quickly validate very diverse sets of documents. It's no longer just a passport or an ID copy. It's driver's licenses, and there's multiple different forms of identification that they can make use of now. The ability to detect forgeries in those documents and then cross-reference those documents against various databases. Um, so I think that's a very positive aspect. I think the negative aspect is naturally with this level of AI that we're seeing in the industry and technology just generally, you also see the fraudsters making use of that. So now you're seeing what was good maybe 2, 3, 4 years ago is suddenly you're requiring to start doing liveness tests, holding up your passport, blinking, moving your face because of that AI forgery. So as the technology moves, so do the fraudsters. And unfortunately, yes, a lot of the friction has been taken out of this system, but there naturally is a concern that some of that friction will get put back into the system just because the fraudsters are moving at such a pace inside this industry. Then you have the biometric authentication, facial recognition, fingerprint scanning, and really all about user convenience. And between advanced document intelligence platforms and your biometric authentication, we really have seen a massive reduction in friction, people, time, and cost to onboard clients. Um, especially in that low, medium risk, high volume type business, and especially in the retail industry, you do see that where you're not having to go out and ask for additional documentation. that's sort of not really in the public domain. So we have seen that. I think for us, again, we do see the larger firms benefiting greatly from this, although smaller KYC tools, even nowadays, that aren't expensive, will have a lot of sort of facial recognition, liveness testing, cross-referencing to databases. So even smaller firms can make use of sort of these what was seen as sort of cutting edge technology a couple of years ago. So that really has started to trickle down into the smaller firms and their ability to use that sort of technology, even though they may not have the scale, but just because the costs are reducing in this space. So we definitely have seen, a big push in this sort of automated identity verification space. Moving on to sort of screening and risk assessments. Again, if you go back a couple of years within the industry, um, not as many tools. There's been a proliferation of tools that have come out. I think if you go back a couple of years, really dominated by a couple of players, your World Checks or Refinitiv, World Check, um, LexisNexis, really the two sort of big names, and then there are often offshoots of those coming around. But now, you go to any sort of conferences or payment industry type events, there are just so many screening engines out there, and that's good for the market, and especially for smaller players who now can make use of some of these tools, and some of them are designed for sort of the payment industry, the crypto industry. So some very positive movements. So in terms of the screening, what we've also seen is definitely a reduction in the number of false positives that we see. So with improved databases, you do see the false positive reductions. You can now whitelist clients, so you're not seeing the same names come up unless something additional is added to that name. Um, and then you also start to see automated risk scoring engines that are continuously starting to monitor data sets. And I'd say this is probably in the larger um, scale and larger clients, we do see that, where we're seeing this sort of perpetual KYC, which I will speak about as we move forward. But you are starting to see that coming to play. But again, what you do need there is the ability to um, have a risk scoring engine that's dynamic, and the ability to analyze large data sets and assign risk profiles. So as mentioned, the continuous monitoring and enhanced due diligence. Um, so I think here we have seen the ability to now start pulling data. So yes, your transaction monitoring and naturally your screening, but in terms of your reviews, people are moving to this sort of perpetual um, uh, continuous KYC. Um, Previously, I think a lot of issues around trying to do that. I think when you do turn those engines on, you often can be inundated with data, because the number of times directors are changing, or even simple things like street addresses changing, and then that forces and could potentially trigger you to do a review or add additional data. And I know numerous, and I've seen numerous times where the perpetual KYC has been turned on and then quite quickly turned off, just because of the constant changes that are flowing into the system that now need to be updated. So it's how you're able to absorb and automatically process that data. And does a change in street address for a large listed multinational require a proof of address if they're just moving from one address in London to another address in London? And I think you need to start making those decisions. And so again, this is very much in that larger sort of organizational space where they have the ability to do this. But I do think, what we have seen is organizations moving into that straight through processing, and their numbers, on an STP increasing from 2% to 10 to 15% of their population. That's likely to continue to grow. And then I think that perpetual KYC will also reduce that sort of review number you have, whilst giving you more dynamic type of monitoring. What also this also means is naturally then you can have better data extraction, processing, workflow, all those things that just make it easier to see your clients holistically. optical character recognition OCR and data extracts out of set documents has massively improved over the last 5 years. Again, we definitely see room for improvement here, and we certainly think it will improve in time to come. All of this also means then you're able to generate type of reporting, a touch of a button, no more exporting into Excels and Tableau, etc., and producing reports. A lot of that stuff is now starting to get built into systems, and you're able to very quickly start building out charts and graphs that can really help you to identify potential bottlenecks, or issues in your process. So moving on to a space that I think will be important, and probably one where there has been a lot of change, but I feel there's still a significant amount of consolidation and improvement in this space. Because I think when you get this right, the ability for straight-through processing, continuous monitoring, and a lot of the automation that we're sort of looking at will naturally improve. In this space, you've got two sort of key areas. You've got your private labels, doing your data centralization, and data sharing. So you can think of your large players, sort of Dun& Bradstreet, BVD, Experian, Credit Safe, Bankers Almanac, Swift, etc. So and they have been a massive benefit, and their data sets continue to improve as well as they make use of AI and improved automation. And then naturally, you've got the government sort of pieces to the one side. So your regulatory bodies, your registers, etc., where you would extract information from. And I think at the moment, in an ideal world, if you look at sort of the Swift platform where you can go in and often pull information, including things, sensitive documents like passports, etc. So really a holistic view. You could imagine that being pushed down from, banks all the way down to small, medium enterprises. That is definitely where the future is, where you're almost tokenizing or blockchaining um, a full client record, be that a listed entity or unlisted or commercial and business banking SME type. And I think that's really where the industry wants to go, and that's where it wants to move to. And I think that's going to require a lot of collaboration between sort of private sector and government sector. So, as mentioned, the ability even now to tap into those databases, API into those, massive improvements for all concerned, and even um, smaller players that we deal with are making use of these, especially in terms of the private sector. So. Um, and really what this allows is it allows you to start then to do your continuous monitoring. If you have those data sets which are refreshed, often in that you can place reliance on. And I think that is the key piece, the reliance you can place on it. And when you can get an understanding of the robustness of those platforms, that really helps in terms of then turning on things like straight-through processing and continuous monitoring. And that all naturally then gives you the ability to operationalize and automate out some of those very manual tasks, and you can remove those from the systems. Uh, And then, of course, we talk about regulatory resilience. So, the ability to detect and respond to various risks as well as regulatory requirements. So, a lot of spaces now where you can very quickly see what's come out in terms of the changes in regs, what that means for your business, how you should adapt, and how then you operationalize those changes. So, you've definitely seen a change in a way that is starting to become more automated. And I think AI is definitely helping in that regard. So as mentioned, I think the trust is one of the key pieces that we need to see, the ability to trust those providers. So what are the industry-wide standards and governance bodies? And as mentioned, I do think this is probably where we're going to see, if we look back in 5, 10 years time, this is probably the space that's gonna really have changed the most and has the ability to really again lift remove some of the friction within KYC and AML. Um, Again, improve data quality. So how often are things updated? Where are they updated from? Cross-referencing data, different data sets, be that from your local municipality, um, to your cell phone records, etc. So cross-referencing all of that data becomes massively important. I think that's where you're going to start to see that consolidation to get that single view of clients, that token that you can then start handling and moving around between various players. Um, Again, reduce duplication and costs, the ability to stop asking for sort of redundant data because you can obtain that through public and private sources. That massive benefit and has really helped over the last couple of years. And naturally, all of this leads to enhanced detection of sort of financial crime, the ability to detect suspicious activity because the screening tools have improved. Um, CIFIS and all those sort of databases continue to really allow you to identify those bad actors. So massive improvements over the last couple of years. But as mentioned, we do feel that data centralization and enhanced data sharing, there's lots of room to improve here, but naturally you do bump into GDPR, etc. So how do you ensure that you're moving in the right direction within the confines of that type of regulation? So moving on to the third component, which is really a focus on customer experience. And this has probably been the biggest change. And as mentioned previously, it's not too long ago that we were forced to go into branches and hand documents in. And I think now that's just such a foreign concept to anyone. You really have to be bumping up against a lot of issues if you're forced to go into a branch. So everything has really become digital first and very much mobile first as well. So the ability to self-serve, submit documents online, um, not having to go into branches of which there are fewer and fewer. All of that means you do see reduced drop-off rates in terms of client onboarding. And you also have self-service and chatbots, which also, I suppose, help to customize the journey and walk people through, as long as it's a frictionless sort of onboard. That also allows customization. So step-by-step guidance in terms of if you're onboarding on a phone. And you can do that in multiple languages, multiple different types of checklists. And what's happening is that in real time, it's starting to risk assess you. And so then it can start to ask for additional documentation. So if you are required to submit financial statements as an example or a source of wealth, um, as well as just your um, ID identification documents and proof of address, it can then start to say, okay, well, actually, in this case, we're going to require source of wealth. Could you provide the following as well? So that dynamic and real-time risk scoring stops the back and forth, um, and really allows organizations to tailor their sort of checklists based on customer profiles. So a massive move forward, really reducing that friction, and focusing on customer experience. I think in all of this space, again, we have seen that trickle down effect, and even smaller clients are now able to make use of this type of technology. So just because there are so many onboarding tools, KYC workflow tools, screen tools available, that they have aimed at different price points. Um, and as we sort of talk to later, within our managed service, we're able to build a technology stack that we can then share with clients, and they can benefit from a technology stack that they probably couldn't afford by themselves, but they would potentially grow into. So taking somebody who's onboarding 5 or 10 clients now, they don't really want to be papering with a screening tool. So we do that on their behalf and grow with that client into that journey, I suppose. Um, so all of this, I suppose, ultimately you have better data and it's automated. You can retrieve it and validate it in real time, and it really allows you to streamline that sort of end-to-end client life cycle. Um, and then we say data sort of managed across departments. I think previously, if you've ever been in a large bank, it used to be a very federated model. And often departments would doing their own KYC, and extremely frustrating for a client that you would be delivering data um, to one side of the bank and then have to go and do it to the other side of their bank. So a lot of that has been removed in terms of that sort of centralization of data, a single story of clients. So that's massively helped to improve customer experience. The other thing is sort of continuous KYC and regular feedback. It's not very often now that your banks would be coming to you asking you to refresh your data in that retail space, where we were seeing that in previous years. A lot of that is just happening, is automated. It's far less intrusive for clients. Um, we have also seen for larger institutions using sort of negative attestation. So the ability to print a file off, sort of documents with the necessary detail of that organization, email it to clients and say to them, if you don't respond within a set time, we'll take it as a given that that data is correct, and that you attest that that data is correct. So we have seen negative attestation. Naturally, we see it in large institutions and for low risk type clients, listed regulated type clients. So again, all about reducing sort of that friction that is built into to these processes. As mentioned, multi-channel support, web, mobile, chat, phone. I think very much nowadays it is everyone builds mobile first. And a lot of these tools cater for various languages. So even, screening tools for smaller clients, you'll see multi-language ability, multiple different forms of identification that they'll accept. So really has come a long way, and that price point has very much pushed down. And as mentioned, bottom line, this is really around reducing friction for clients, and be that retail or larger wholesale. So really how we see this in terms of managed services, um, we do see it has moved to becoming, those large body shops that were previously there 10 years ago have significantly changed. And I think if you are running one of those, you really have to try and use automation to improve the customer experience, as mentioned before, and just decrease customer onboarding time, decrease review time, and all of that will decrease the body shop type experience. And I think that's why a lot of managed services typically didn't embrace this, because the money was made from the person in the desk. But I think that's changing massively. We've also seen a large onshoring effect, where especially larger institutions are bringing that back in-house in some instances. And that's because I think some of those sort of body shops haven't moved with the times, haven't brought in that level of automation that is required, and I suppose that the end clients is demanding. I think on the smaller side, what we've seen now is definitely sort of a push for clients where previously their compliance officer was doing it, and they're almost at the stage they want to hire someone, but not enough work. We're seeing a lot of that, especially in the sort of 0 analyst to 5 analyst space, moving into a managed service, the ability to produce cost savings for that client, to give them a level of expertise, scalability, and flexibility, and that technology stack. I think that's really what we see in this industry. So naturally, cost savings, a key component. You can make use of low cost locations. You don't have that fixed overhead, national insurance, desk space, computing space, etc. Your peripherals of systems, equipment, etc. So we do see that as a driver within this space. There is access to expertise. You would hope the managed services, is employing the best, have strong training programs, and also sometimes in some of these smaller clients, they literally have one person on the ground. That person goes on leave or is sick, and suddenly a backlog's formed. Clients aren't being onboarded. So the ability to, train 2 or 3 people to deal with a smaller a smaller client really gives them that flexibility that they wouldn't normally have. And that really talks about scalability and flexibility. The client who's at 5 clients onboarding per month at the moment, we know is going to be at 15, 20. And so we can quickly scale into that. And especially if there's any acquisitions or a change in scope and profile, and there's a large sort of onboarding requirement that can be accounted for. So as mentioned, we do see the change in the space is the access to advanced technology. So the ability to offer a technology stack to clients that they wouldn't previously be able to afford. So I think it's a massive positive. Also, where we are just citrusing into clients' environments, the ability to I suppose consult to them and explain to them what is the latest technology in the space. I think a lot of them were using sort of what I would say legacy screening tools or onboarding tools, maybe don't fit the profile of that firm. And the ability to go there and to say, okay, well, as an asset manager, we feel this is a better system for you, and this is a better screening tool based on your volume. And it should essentially save you money and reduce friction. So we do see a lot of that happening, people moving into more tailored onboarding, screening, transaction sort of monitoring type tools. All of this, I think, ultimately leads to improved service quality, so accountability, quality, and that sort of continuous improvement that is required. So the ability to go back to clients and to inform them about their onboarding forms, which, if you add 1 or 2 things in, be it a requirement to ask for financial statements, the clients may not produce them, but if some of them do, that's one less thing you potentially have to ask for. So what are the tweaks on sort of your onboarding forms, your risk scoring matrix, the things that can make a difference to basically reduce friction? And I think it always goes back to the ability to reduce friction. I think that's massive. And then naturally ensure you're complying with your regulatory obligations. All of this really allows time savings, faster service delivery. It's mobile first, often turnaround times are reduced, and allows clients to focus on sort of what are their core competencies and strategic initiatives. So to conclude, I think for us, what we've seen a massive improvement over the last 5 to 10 years. As mentioned earlier, nobody's going into branches anymore. Paper documents just don't really exist in that type of space. Tools are improving massively. There is the risk that fraudsters tools are improving at the same space, and that's why we've seen a change now into sort of liveness testing, etc., which we didn't see before, but has added additional layers of security because of these types of concerns. I think what we've also seen is, the ability for smaller players to be able to access technology that was potentially previously out of their reach, and technology that's more suited to their requirements. There's some, very large players out there, well known in the industry. They're not going to suit, a small asset manager. Just not going to work like at all. Small corporate finance firm. So what sort of products are tailored for the size and complexity of the organization? And we've seen that expand, and it's to the benefits ultimately of the purchases thereof. We do think, data centralization, enhanced data sharing, if we come back in 5 years' time and do a webinar around this topic, that's probably where we're going to see massive changes. That will then allow sort of, when your data is clean and correct, that allows tokenization. We can start talking blockchain technology in terms of the space, etc. But that is a key piece that probably needs to have a couple more years development. Ultimately, we're there just to remove the friction. And as mentioned, we do see managed services playing a significant role, be it from, a small firm onboarding 5 clients, which we actually see a lot of, all the way up to those sort of larger firms who've traditionally outsourced this to get scalability, cost savings, flexibility. So really that's it from myself today. I hope that was useful. I'm sure the presentation will be shared with yourselves. And as mentioned also, well, if I didn't mention, you'll also have ability to use Vika, which is our AI tool. So you'll be able to sign up for free, ask Vika some questions, compliance questions, and you'll see the answers are very precise. So just want to say thank you for joining us today. I hope that was beneficial. If you've got any questions, please feel free to reach out to me, and we'll be happy to help you in that regard. Hope you have a great day. Thank you.